started working very closely with my other two of my other partners. We grouped together, and actually, it taught me a lot of lessons, especially the asset management lesson. Actually, like how to trim down the cost, how to resolve even the conflict among the partners. That's another thing many people actually need to learn also, because we all are human beings. We have emotions, right? I mean, it's not like all partners will work in a sweet and I mean favorable way. Many a times, especially when tough time comes in, people behave in a different way.
Welcome. This is the Hot Real Estate Investing Podcast, a podcast dedicated to helping others through real estate investing. Our hosts interview guests from all aspects of real estate investing who generously share valuable experiences and advice. Whether you're starting out or an experienced investor, this is the show for you.
Hello and how's it going? My name is Travis Shelton and welcome to the Hot Real Estate Investing Podcast, where we focus on the mindset, motivation, and methodologies of successful real estate investors. And today I'm really excited to talk about my favorite subject, multifamily investing, with Sanjoy Dey of Corfu Capital. Sanjoy, thanks for joining me today.
Thank you, Travis. Thank you for inviting me to this show. I'm really excited about it.
Absolutely. Well, I appreciate your time, and I always enjoy talking multifamily. But would you like to share with our audience just a little bit more about yourself and your real estate focus?
Yeah, sure. So I'm actually based out of San Diego. By profession, I was an electrical engineer. I worked for a Fortune 500 company for about 16 plus years, and I entered
Okay.
into the real estate domain about 10 years back with single family rental homes, and then about 3 years back I came to know about the multifamily, and I found that this is an excellent way to scale up, and then I have embraced it, and I then
hmm
formed this company about 2 years back. It was June 2022. And since then, I joined five different deals or five different projects in Texas and Arizona and helped about 50 different investors. So my future goal is
Okay.
to help, at least 100 investors in next 1 year or so, and to focus more in the Sunbelt region.
Well, me and you both like those regions and multifamily, so really think we're going to connect and have a great conversation. But we always like to start this show off with a little motivation. So, can you share your motivational quote with the audience?
Yeah, sure. My motivation, of the code is like, improve yourself by 1% every day. It's like to put yourself into some consistent path. We can't
Mhm.
achieve everything at the same time. We just have to achieve gradually, but that gradual path need to be there.
I love this. I absolutely love it.
Yeah.
There's something I read probably 10 years ago that said, it's like compound interest. It's like a penny every day, right? It's like if you add that 1% up a day, I think it's like, 36,000% by the end of the year. And so I always tell people that when people are in a rut, it's like just take a step forward today. Just do
Yes.
one thing. Like
Right.
you're gonna be thankful for it down the road. So
Yeah.
really appreciate you sharing that. And I think that mindset of investors, if you're thinking about it, taking that one step forward every day, you're going to get a long ways because you're going to stack multiple steps or 1% together. So
Right. Right.
really love that. So
Yeah.
let's now dive right into the main, crux of the conversation. And how can you help our audience of real estate investors?
So, for the real estate investors, if I consider that they are mostly focused into the multifamily, because like the real estate has several domains. It could be self storage, it could be
hmm
like mobile home, it could be land, it could be Airbnbs, it could be multifamily, and each domain has its own
Yep.
knowledge path, and one is totally different, or even hotels, and each one is different than other. So first the investor would need to know which sector they will focus into. Let's say if they focus into multifamily, they need to first identify a good operator. And when identifying an operator, they first actually need to find out a person whom they trust, because of course they cannot actually
Hmm.
pick someone from the street, or pick a company just whom they found from the website. There are many
Sure.
companies like that on the websites, right? So they need to actually tag themselves with someone they trust, them whom they know, and then they need to find out that, okay, what are the background of this sponsor. And also, it's not the sponsor, like the sponsor is probably teaming up with other people. Like, okay, what are the
Hmm.
backgrounds of those other people, who will be the lead sponsor in that project, and what is the strength of that lead sponsor. Because as you know, Travis, like in a project there could be like 10 different people, I mean, whom we call as a sponsorship team,
Absolutely.
right? But it's not like that 10 people are actually running the project. It's like maybe like two or three who
Exactly.
are actively running it, right? It's not, other people are helping, but not as much as those two or three people. Now sponsors need to know who are those two or three people, although they are actually probably investing through some other sponsor. Another thing they need to actually keep in their mind is, whether that project will have some boots on the ground from the sponsorship team. So
Sure.
it's like, I mean, it's also doesn't like that that everyone from the sponsorship team need to be in the same city where the project is located. Let's say among the 10 people, if two or three are living close to the project, that should be fine, but that need to be there. Because in my experience I found
Yeah.
that that creates a problem if all of them actually are like living, I mean, off stage or something like that. And the third thing
Sure.
comes in places like, how was the underwriting, I mean, whether how what are the
Hmm.
factors that the sponsor took into consideration. And this is something I tell my investors, that hey, you know what, before asking me about returns, you ask me that how do I make sure that you will not lose money. Losing
Sure.
money is bad. Losing
Yeah.
money, losing money is very bad. So ask me before you ask me the question of how much you get your return. Please ask me the question how I am putting, or what are the mechanism that we have put in place so that your investment is secured. you know what are the mechanism, what are
Yeah.
the three
No,
four
that you're right. That's a great question to start off with, and one I think many people overlap, right? We Everyone looks at the pot of gold and they say, "Oh, everybody, I want to double my money."
Yes,
But I think you're right. A lot of investors don't say how secure is this investment? How good is this sponsorship team? How good is the asset? How conservative was the underwriting, right?
yes,
And anyone can play or fudge around with numbers and make
yes,
something look really, really attractive,
attractive number.
right? And as a sponsorship team raising money or capital, your job is to raise the capital. So they're selling you. So you have to be able to do your own due diligence and evaluation of the underwriting and the sponsorship team and whatnot. So maybe just taking a step back, you had mentioned single family and doing some different things and mobile homes and all these different investment strategies. So how did you yourself kind of find multifamily or decide on multifamily as opposed to some of those other investment strategies or vehicles?
So it's not like I actually explored the other domains and then I chose this one.
Okay.
It's not like, okay, I found that, oh, this is the best one among all the different asset classes. It's like I actually found this route through one of my friends. He kind of introduced me to this field, and then I
Nice.
started gradually, started learning about it. And as I told you, like, one particular asset class itself is a vast field. It's very hard to focus on
Yes.
multiple domains or multiple asset classes. So I thought that, okay, let me focus onto this particular field and let me be an expert. You know, that's the reason. That's the thing.
Yeah. No, I love it. So, in your own particular, experience, did you go straight into buying multifamily yourself? Did you start as a limited partner yourself? Tell me just maybe about your first couple deals and how you actually got started into multifamily from the get go.
Yeah, very nice question. In fact, some of the prospective investors whom I met, they actually asked this question, that hey, you know what,
Yeah.
I don't want to invest, I want to be like you. Okay, I just want to be general partner, or an active partner. How can I be
Okay.
like you? Then this is what I tell them, that hey, you
Yeah.
know what, in order to be, it's not a hard and fast rule, but this is the path that I followed. I first actually invested as a limited partner in multiple deals,
Hmm.
because this is the thing, if I don't invest as a limited partner, then how should I know that okay, the basic abcds of this investment strategy? When I invest as a limited partner, then I know the abcds, right? That okay, how the
Yep.
syndication works, how the investors communicate with the sponsor, or what are the sponsor responsibility, and all
Exactly.
these things. And also then I can tell my investors, when I become a general partner, that, hey, you know what, I have done this thing, this is my experience. And actually
Hmm.
that actually gives them some confidence, okay, that this is not a, like, this is not a guy who is just starting from the scratch, he already has some kind of background.
No, absolutely. Couldn't agree more. I was very much the same, invested as a limited partner in big multifamily syndications before being a general partner, raising money in other deals. And I think it goes a long way for your investors because you can say, I've walked in your shoes. I know some of the concerns you have. I know some of the questions, but also, let me share my experiences. And I think being a limited partner also makes you a stronger general partner because, to your point, you start learning how sponsors communicate. Do you like it or do you not? You like how they report out or do you not like your reports? How can you improve those for your own investors in the future? And so, to your point, I think you kind of hit the nail on the head on every single one of those points of the values of being the limited partner. So tell me, like, so why? I mean, so what are you doing right now, and kind of where's your focus? You kind of said the Southwest, or the Southeastern belt, Sunbelt states. So let's talk a little bit more about your current strategy and your company, Corfu Capital.
So yeah, as I said, I formed this company 2 years back, but I did quit my job last
Hmm.
December. Now I'm actually full focusing full time into real estate, and I'm trying to expand my
Okay.
company, like, marketing wise, and in all possible ways. So my current focus is, of course, the Sunbelt region, Texas and Arizona. It was on the list, but currently I'm exploring the market of North Carolina, Charlotte market as well. And in future also,
Okay.
I'm actually also talking to a few other operators in Florida and Georgia. So in future I may also expand into those regions, because the investors sometimes they like diversity, because I have investors from
For
Florida or
sure.
Georgia. They say that, hey, why only Texas? Or do you have any project in this region? So it kind of entices them sometimes.
For sure.
So yeah, so those are the things. And yeah, in for this current year, my goal is to actually take part into the acquisition of at least two more properties. It could be in Dallas, or it could be in Charlotte.
Okay, very nice. And I guess, as you mentioned, in multifamily, you can invest so many, even within multifamily, so many different ways, right? It could be small duplexes, it could be really 1,000 unit apartment buildings, it could be value add, it could be A class, C class, D class,
Yeah.
Section 8. So, what's your niche, perhaps, or like Corfu Capital? What are you focusing on as far as trying to find different, sponsors or different deals? Is there something you've kind of landed on that you think's the sweet spot?
Yeah, of course. So we found a sweet spot for the Class B and Class C properties. I normally don't run after the Class A properties, because in
Mm,
the current economic situation, right? Or if the economic situation goes bad, people normally try to
yeah,
cut their expense. People who are in Class A, they try to move into Class B, which probably gives a $200 rent. I mean rebate or something like that. So that's why my focus is mostly the
sure.
Class B and Class C. I
No,
I lit yeah, yeah. I little bit moved away from Class C, because Class C these days is showing very high expense. Although it totally depends on the scenario, right? If we
mm,
can get a property with a very discounted price, then the class C, buying a class C makes sense, because then your cost basis is very low. But if you see that if a class C property is being bought with a very high price, then it probably doesn't make sense to go after the class C properties. But yeah, I mean, mainly class B and class C, these are our kind of niche areas or so.
Absolutely. Yeah, I mean, we speak the same language because we both like those B and C value add deals. I think that you can force appreciation a little bit, and I think, as you mentioned, if you can't afford a class A, you're likely to go to a class B. As you're, maybe making a little bit more money, you go from a C class to a B class. So I think there's always a great market for that type of product, especially when you're improving it, and you can have rents a lot less than these really nice class A apartments that are popping up everywhere. So you'd kind of mentioned at the beginning, that you think, for a newbie that maybe this is the right sort of investment vehicle. So can you expand on that? Why do you think this is the best investment vehicle for like a new investor?
Yeah, so I can tell you from a perspective, like when I speak to high net worth individuals, when I ask them that, hey, what are the investment strategies that you are taking right now? 80% people tell me that we only invest in stocks. They do not have any other diversification. And
Yep.
we all know that stock is extremely volatile vehicle. I mean, you can lose money, you can earn money, and it gives a lot of strain that many people do not consider. Now, apart from the stock, what are the other options? Of course, the option is you can buy a single family rental home. Now, there is a problem with that as well.
Sure.
Think about it. Like most of my high net worth investors, they are from the state of California, and in California, the house price is really high. Let's say if you want to buy a rental property, it
Yeah.
may cost 800 to 900, 1 million at least, which means you need to have around 200K, right? Down payment. So, which means that
Yep.
your barrier of entry is very high. Your initial investment is becoming 200K. Even after the 200K, you may end up spending out of pocket expense to actually kind of pay off your mortgage and other things, other maintenance cost or so. So, but
For sure.
in compared to that, when you invest into multifamily, we are giving you an option to invest, like let's say $50,000. So your barrier of entry is very low, right? And the second thing is,
Hmm.
unlike single family home, here you do not have the headache of like all this, which you call triple T, right? Trash, toilet, termite. You don't
Yeah.
have to like worry about it. You are investing in the money, and then you are hoping to get the return out of that, right? So that's why I think
Hmm.
if we consider these three different domains, right? That stock, uh, your single family, and then multifamily, then I would consider that I would say that the multifamily is, of course, the best option among these three options. I'm not even considering the bonds also, because bond has a very low, rate of return also.
Yeah. No, I mean, I agree. I always think when people think it's maybe too big of a leap, I always tell them kind of that same story. If you're going to go buy a single family home and you got to put the investments and deal with the day to day and do all those things, and you haven't experienced it, I think that's why so many people, tinker around with real estate investing, or maybe they buy another home and they can't sell their home, so they wind up as a landlord, and then they hate it and they have negative things to say about it, but it's really nice to invest that money and never have to lift another finger again and just get that distribution every month, auto into your bank account.
Yes,
I enjoy that myself. So
mailbox money.
I totally get and can kind of feel from the investor standpoint. Yeah. All right. Well, wonderful. I guess, is there anything that you said most of your investors are California? You're from California. Um, are you typically kind of where are you finding your investors? Are they all people that you worked with previously, other engineers, or is there, I guess, an investor avatar that you tend to work with?
So I'm actually building up an investor avatar right now. But so far, people like whom
Okay.
I knew in the past, my former colleagues, my friends, families, extended families. So those are the people who actually invested with me. But of course, right now I'm actually trying
Sure.
to expand my horizon and trying to reach out other people as well.
No, that's wonderful. And hopefully this podcast helps a little bit so we can get your name out there and some of your opportunities to more people that you're able to connect with. But Sanjoy, did I miss anything? Is there anything else about Corfu or about yourself that you'd like to share with the audience today?
Um, Not about Corfu or so. I mean, I can share um, my experience probably. Like I mean, like how I one of the property. I mean, maybe a story actually. How in one of the properties I helped
Sure, let's hear
my
it.
partners to turn around and to double the NOI in just 1 year. So we kind of acquired the property in June 2022. After the acquisition, we found that the property was in a pretty bad shape because of so many deferred maintenances, and the tenants actually just started leaving.
Hmm.
The previous tenants, because they because like to when we buy a property, it takes about 6 months, and so previous owner kind of gave up during that time, and the tenants were super frustrated that their AC was not working, the pool was in a bad shape, so our occupancy kind of dropped as a sharp fall,
Mm.
and we were in a very very bad shape at that moment. So then I started working very closely with my other two of my other partners. We grouped together, and actually, it taught me a lot of lessons, especially the asset management lesson. Actually, like how to trim down the cost, how to
Hmm.
resolve even the conflict among the partners. That's another thing many people actually need to learn also, because we all are human beings. We have emotions, right? I mean, it's not like all partners
Hmm.
will work in a sweet and I mean favorable way. Many a times, especially when tough time comes in, people behave in a different way.
Yeah,
You
for
know,
sure.
they get frustrated. Um, they do not actually work in an amicable way. So my task was, I would say, my biggest achievement in that case was to unite my whole team. I united my whole team. We were
Mm.
six of us. We were kind of had so many different views, but my main job was to bring them on the same table
Hmm.
and to get the team spirit, and that worked. That really worked. When we all kind of got united, we all sat on a table, we were all speaking in the same language, then things started turning around, and now in the property we have 96% occupancy, and our NOI got doubled in just 12 months. So that's a success story I would like
No,
to
thanks for
tell to
sharing.
my
And
audience.
definitely, I think it's always easy when things are going good,
Right,
right?
right.
But when things are going bad, especially in these sorts of deals with multiple partners,
Mm-hmm.
and a lot of these partners, like you had kind of mentioned, are general partners. They'll do different deals with different teams and different people all the time, right?
Right,
And it's not
right.
always that the same individuals are doing 10 or 20 deals together, and so they don't know how to deal with the ups and downs. And so you do have to sometimes mitigate those relationships and take ego out and figure out a way to all get on the same page. So I definitely appreciate you sharing that story.
Yes,
But Sanjoy, are you ready for the hot seat?
yes, of course, of course.
All right, let's do it. We ask all our guests the same final four hot questions. So, number one, what is one book you'd recommend to someone wanting to know more about real estate investing?
This is the book that I recommend.
Best in class. Love
Best
it.
in class, yes. And you know what?
Yeah.
Interestingly, Gary Lipsky, who is one of the co-authors, he's one of my partners in one
Yep.
of the deals that I'm in. It's in Tucson, and he's an amazing actual operator.
Okay. Yeah. Gary's great. We've actually had him on this show.
Okay.
Yeah, Gary's an awesome guy,
Yes.
and
Yes.
they do a great job.
Yes.
Break a Day Capital, I believe.
Break of the day capital.
But
Yes.
yeah, Gary and his team does a great job, and I know,
Yes.
yeah, just sold or bought another deal in Tucson. I don't
Exactly.
know if you
I
were you
know.
on that 94 unit? I think they closed this week.
Yes, yes, yes. So anyone, if they read this book, they will learn a lot.
Oh yeah,
Mhm.
definitely. That's a great book recommendation. So number two, what's your favorite productivity tip or trick, maybe a tool, app, or something that allows you to get more done than the average person?
So I actually chunk my time for different activities. I don't try to do everything at the same
Okay.
time. I mean, let's say I allocate few hours for few activities and I don't do anything else in that time. Let's say when I read book, I just read book. When I'm working on my email campaign, I'm just working in that. Even, I mean, I'll not be able to, I'll not be like picking up my phone or something like that during that time. So that's my productivity strategy that I follow.
Yeah. I find that so common in the most highly effective people. They time block, they time chunk, they get into deep work, into very specific things, really deep, and they don't let outside distractions take them outside that. Like you said, their phone is off, it's on silent, and you won't hear from those people for a couple hours. So definitely, I think something we all should be doing. What's your biggest real estate mistake or failure, and what did you learn from that experience?
So my biggest, I would say that so far my biggest failure was not in for real estate. Actually, I invested as a limited partner into a deal without doing a very deep analysis about the sponsor
Mm,
and about, especially about his underwriting. So that was my biggest mistake that I have done so
mm.
far. I should have done thorough research on him and the aggressive measures that he or aggressive tools that he was using. I should probably be considering those.
Yeah, it makes total sense. I hear that unfortunately a lot. It's like we talked about before, when things are good, everyone was making money, and if you're not doing your own underwriting, or you're expecting that their underwriting is as conservative or spot on as yours, you're usually mistaken. So
Yes, yes.
there's a lot to be learned, even on the limited partner side, to being able to evaluate what is a good deal and what is a bad deal. And finally, if you could be remembered for one thing, Sanjoy, what would it be?
uh, that's a tough question. Maybe for my smile.
This is always the hardest. Yeah, it's always the hardest.
Maybe for my smile.
I
Yeah.
like it. I like it. I haven't heard that one yet, so that's a good one.
So
Go
my
ahead.
my friends or my colleagues, they don't remember me as a like real estate guy or as an engineer or something like that. They remember me because of my storytelling capacity. Many a times I tell stories, and I'm actually a writer. I write travel blogs. I wrote
Okay.
Yeah, I wrote about 7 books in my native language.
Oh,
So
wow.
yeah, so that's what I guess people will remember me for.
Oh, that's fantastic. I had no idea. Yeah, you should definitely tell more people that.
Yes.
Yeah, I had no idea you were a writer, and 7 books. That's incredibly impressive. So congrats to that.
Thank you. Thank you.
All right. Well, the best place for our Hot REI community to connect with Sanjoy, we'll be able to connect. We'll put all his social media links and all his website information in the show notes so that you guys can connect with Sanjoy. Sanjoy, this was really a pleasure. I always love talking multifamily, and I love your story, how you got into it. How you you were able to leave your job, and now you're doing full-time real estate investing. We both share the similar passion and areas of real estate investing. So look forward to staying in contact with you. And to the audience, thank you for tuning in today, and commit to taking action today to move your investing forward. Take care, and God bless.
Thank you for listening to the Hot Real Estate Investing Podcast. Check out our website, hotrei.com, for additional content and resources. And please take a moment to subscribe and leave a review so we can continue to bring even more value to others through real estate investing.